Hello and welcome. Sustainability is the talk of the hour, and we have a very special guest joining us today, Satish Ramchandani, co-founder Updapt ESG Tech, and we will discuss the ESG landscape in India and globally. Satish, welcome.
Thanks, Shruti.
So, what does Updapt do?
So, Updapt is an ESG tech firm wherein we have built digital tools and wherein our tools would help medium to large businesses to digitize their entire sustainability journey. So, what I really mean by that is the way you have large financial accounting systems and reporting tools, our solution is for ESG accounting and reporting. Right. So, typically, our business would use a SaaS solutions to record the ESG data points. They can perform the entire carbon footprint accounting digitally, generate reports for regulatory purposes and also for management reporting. A lot of AI and ML driven analytics for business insights.
Right. You spoke about AI-driven models. Uh, how do this technological, ever-evolving AI and blockchain intersect with ESG practices and reporting?
I think, see, if you look at businesses, specifically large businesses where the data is spread across the operations, whether it's domestic businesses or global businesses, huge data sets are of prime importance, right? So AI obviously enables companies to automate the entire data collection, analysis, and reporting itself, reducing the manual effort and obviously improving the entire efficiency and accuracy, given that these data are auditable and are going to be used by the market. And from a blockchain standpoint, obviously we all know the core strengths of blockchain, right? Right from transparency and the trust itself. So it aligns perfectly with the goals of the ESG reporting, right? Which again you're going to file with the regulators, investors are going to use it, rating agencies are going to use it, right? So blockchain obviously allows for creation of tamper-proof records.
Okay. And say I was an investor, how can investors navigate through the ESG landscape? For example, in India, we have a little less robust regulatory frameworks. So how do an investor navigate through the landscape?
Yeah, maybe I'll just spend about 30 to 60 seconds more on the context for some of the audiences, maybe, going back to the ESG concept itself, right? Which
Right.
typically would be recording all the data around environment, social, and governance, right? So environment would be all your energy, water, waste transactions. Similarly, social would include health, safety records, gender diversity and training. G would record all your governance and audit committee, board meeting records and everything. So obviously these, beyond the regulatory reporting also, these are fundamentally risk, which the firm should really look at and ensure that you have enough controls to mitigate those risks. So essentially, it's a very prominent part of any business process. So though 30 countries have made ESG reporting mandatory in nature or disclosures mandatory in nature, it's beyond just the regulatory reporting. It becomes very essential for the businesses to look at their ESG processes and how they are really performing. Specifically from an investment standpoint, as you just mentioned, right? So investors, when they invest in a particular business or an entity, whether it's a large investor like a mutual fund or an insurance company investing in large corporates or listed corporates, or for that matter, even VC or private equity firms investing in small startups or growing startups, right? So they obviously look out for returns which are more sustainable from a long-term standpoint. Right? So obviously it's essential that they look at the ESG processes of the businesses so that the returns, what they're looking at, not only from a short-term perspective, but also medium to long-term perspective, where the businesses are sustainable, right? We have seen businesses falling because of, say, weak governance processes over medium to long term. Right? And then again, if you look at another set of investors, whether it's the private equity or the VC, they have their agreements and term sheets from their general partners, their limited partners, and their institutional investors. Right? Given that so many investors have tied up to or signed up to the UN PRI agreement itself, in terms of their alignment to the ESG goals.
Right. So AI and blockchain can, bring some kind of disruption, some kind of challenges to these companies. In your view, how can these companies turn these challenges into opportunities for growth?
No, I think, see, even technology would have some challenges, right? That's why you have
Sure.
firms, infosec teams in companies. You have large IT teams, to ensure that they're, from a hardware standpoint or a software standpoint, you have enough controls. But obviously, there's no denying the fact in terms of the benefits of smart digital tools, AI and ML embedded features in that, right? So from a ESG standpoint, how do you really manage the huge set of data, across your business operations? How do you really calculate your GST, greenhouse gas, or your carbon accounting, right? And how do you really make use of that data, which will give you further insights that, hey, here is where my energy consumption is going in a direction where I can really bring in efficiencies, or here is where my water consumption or my waste management processes, I see a lot of areas of improvement. So obviously those deep data insights, beyond the improvement in the processes from a data efficiency standpoint, but can also help you in cost efficiencies where you can optimize the usage of your energy, water, and waste.
Right, right. So moving on, Satish, what are some of the strategies that Indian companies are using to meet their ESG goals?
So I think from an India standpoint, I heard you sometime back, in terms of India, what India is doing, or but I think with the BRSR, which is Business Responsibility and Sustainability Reporting, as we all know, is now mandatory for 1,000 listed companies by market capitalization, and they have to report their performances from March 2023, right? So that's a really big positive move, right? Though it
Mm.
may sound regulatory, but by virtue of that reporting, we have a lot of companies, who are investing in those processes. So that's one piece. Second, obviously, with banks and rating agencies also seeking these data points, we have a lot of banks in India also who are gradually mapping the ESG risk to their underwriting framework,
Right,
right? So it's typically for large loans, right? So again, there's a benefit for the companies also to manage the ESG processes where they can negotiate with the banks on better terms. Similarly, with the investors, when companies are raising funds, right? So the ability to raise funds, and then obviously the ratings itself, right? Better the ESG score, lower the risk, and hence, you getting a higher rating in the market itself, from a reputation standpoint or other financial metric standpoint, adds on to your overall P&L. So Indian companies are gearing up. I would say what India was 2 years back, they're much better. One of the reasons is the BRSR. Second is the kind of investments which are happening in the renewable space. Again, we are seeing a lot of investments in that space again. Government is promoting a lot of these new age technologies. We have electric vehicles now being manufactured. Consumers are gradually buying that. Obviously, more support from the government specifically, so that the end consumer also starts using products and services which are energy efficient, right? From a cost standpoint, would help. Right. So Indian companies, I would say, are much better what it was 2 years back. At the corporate level, also, we are seeing a lot of sponsorship, by the board and by the managing directors and the CEOs, to invest into the ESG process. Obviously, it's a long way to go, no doubt about that. But I
right,
think the beginning has been really solid.
right. And how are private equity funds adapting to the increasing demand for sustainability investing?
I think from a private equity standpoint, obviously, they are trying to create awareness in their portfolio companies. Many of the private equity firms have started collecting those ESG data points from their portfolio companies beyond the conventional financial metrics. They have started seeking those ESG data points on a quarterly and annual basis. Right? They obviously building capacities in those firms. They're also doing ESG due diligence before investing and post investment also. Right? So these are some of the initiatives which or the activities which the funds, the Ps are doing. Obviously, it also is a function of the nature of the business of the portfolio companies and the size of those investments. Again, private equity, as per the term sheets, which they have with their investors, gotta monitor the ESG performance of the entire portfolio and the fund. So again, as I
Right.
said, that section of the business itself is also seeing traction. We have PE firms also who are started investing in digital tools or due diligence processes of this entire activity.
Yep. Yep. It's slow, but it's definitely happening. One last question, Satish. How does all this influence the long-term success of investments?
So, as I said, eventually businesses exist for profits, right?
Right.
Yeah. And obviously, you need to earn profits over long term rather than very high profits on short terms. Where I'm coming from is obviously you need to invest in your sustainability practices or ESG processes, right? And hence, eventually, there is a balance sheet benefit, right? For example, if you don't invest or if you have a low environment score, or health and safety of employees is not taken care, there are accidents, so it will impact your brand value, which could impact your performance, which could impact your stock price. Investors seeking these data points, so if you have a higher ESG score, you could negotiate better with the investors in terms of the cost of funds or the ability to raise money. Same with the lenders again, or the rating agencies. You could probably showcase your investments in the ESG processes and your scores itself, and probably, as I said, have really deep engagements in terms of what the rating should be. So from a long-term standpoint, right, obviously it makes sense to invest in those ESG processes, constantly enhance your ESG score and metrics, right? And obviously the entire business becomes more sustainable and you earn recurring and sort of consistent profits, over time.
Right. Right. Um, Thank you, Satish, for joining us today. The discussion was quite good. We got to know a lot of things about ESG and sustainability, which is the need of the hour, if I could say that.
Yeah. Thanks, Shruti. Great meeting you.
Um, Thank you, viewers, for watching us. That was Satish Ramchandani, co-founder of Updapt ESG Tech.
Subscribe to One India channel and never miss an update.